Let's talk to Ben Kumar. He's an investment manager at Seven Investment Management. Very good morning to you, young Ben. Right, commodities. I noticed with interest, gold is at its highest since 2016. Oil's at its highest since 2014. Is the super cycle back? Remember those famous words?
Well, I think we're still dealing with the effects of the commodity super cycle, the massive ramps up in production that we saw basically going through the crisis, through the easy money period, 2012, 13. And then, like you say, all that capacity was built up. People started pulling oil out of the ground for fun, and then the price fell in half, and then in half again.
Yep.
Now, though, we're at the point where if you look at the management at a lot of the big miners and the big energy companies, it's changed. And they've brought in guys now who are not energy or mining engineers, right? They are financial engineers.
Business
They're people who don't really mind whether they run a mining company or a retailer or a bank. They're CEOs. And they don't get excited by the thought of drilling mines, of drilling holes in the ground, of digging a mine. They see that as an expense. So when you talk to those kind of companies, you get the sense that they are not going to be ramping up production anytime soon. They're not going to be going out there and saying, okay, well, let's increase the amount of supply. They're happy just to take the profits. Most of those CEOs get compensated in shares, so share price rising is good for them. And I think that means that global demand reasonably stable, supply kind of tailing off, commodities could be in for a rally. And it kind of extends across the broad commodity spectrum. People tend to focus on oil and gold. I think it's a really interesting place to be. And lots of people have completely written it off, right? People haven't been invested in commodities for years. Why would you when the equity market's, growing great guns? So investing in the raw commodities themselves, I think there's scope for price appreciation. And I wouldn't be surprised to see some of the mining and energy companies, they've rallied spectacularly since the middle of 2014. There could be more to come, just based on earnings alone.
So if you had some sort of money stashed away, would the commodity sector as a sector itself, would that be your number one pick for 2018, or one of your high conviction?
I think it's probably a high conviction pick to just do better than people expect. Thinking about the oil curves, for example, they're now in backwardation. So if you buy 1 year oil forward, you get 6% just for holding it if the price stays the same. That's something we haven't seen for about 5 years.
Right.
There are lots of reasons, lots of just kind of rumblings, right? You look for kind of things out there in the market. People starting to get interested in commodities again. People starting to say this might be investable. And at the moment, we're pretty short on investable assets. Right?
Yep.
I can't find anyone who's screaming, oh, equities are cheap, bonds are cheap, whatever. Commodities are cheap. They can stay cheap for a long time. I just get the sense that people are starting to go, this could be the scenario. This is the world in which commodities do well.
Ben, as always, brilliant stuff. Thank you for your time.